Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra, and this is the earnings special edition where our focus is on Greaves Cotton's earnings. Remember, the company has reported growth of about 10 odd percent when we come, or 12 odd percent on the revenue front. So we have seen that coming in for the company as far as the standalone results are concerned. We have seen a 444 odd crore rupees of net sales for the June quarter. We've also seen the quarterly net profit come in at 36.5 crores in June quarter, up by 8.1% from 33 odd crore rupees reported in June of 2023. The EBITDA stands at about 61.8 crores for the company, which is also up by about 13.7%. To detail for us the key insights from the quarterly earnings as well as the outlook going forward, I'm now joined by the top management of the company. Ms. Akhila Balachandar joins in. She's the CFO of Greaves Cotton. Akhila, warm welcome to Business Today Television and good to have you with us. Do tell us at the start of the interaction, how have you assessed your own quarterly earnings? Has it met your expectations? What have been the key highlights for this quarter? And at this start of FY25, what is the outlook that you're looking at?
Thanks, Sakshi, for having me on the channel. Much appreciated. We are very happy that we've been able to start the year on a very positive note. If you step back and take our journey of the last 4 years, particularly post COVID, we've had a massive transformation journey. We moved from being a single product company to a multi product company with a very well diversified revenue stream. We've been able to work on our product mix, on our cost, on our margins, and we are now on the track to, we are on the journey to be a 13%. We are on the journey of a 11 to 13% kind of a margin on a regular basis. So yes, been a very satisfactory quarter this quarter, and augurs well on the journey that we have embarked on.
Right. Akhila, now do tell us, going forward from here, since you are working in multiple verticals as of now, there is, of course, the newer EV vertical as well that you are expanding your presence in. I want to understand which are going to be the key growth drivers going forward from here. How do you see yourself growing over the next few quarters? What is the outlook as far as the top line and the bottom line is concerned for FY25?
So what we have done in our transformation journey of diversification is we have the core legacy engineering business. We've always been known as precision engineering companies, extremely strong on manufacturing. So that's one of the key verticals and which is doing extremely well. Second, we have embarked on our retail as a second important part of our business. And here again, we have been over the last 6 to 8 quarters strengthened the overall product portfolio, the organizational strength, and the digitization journey that we have embarked there. Third is the OEM manufacturing, EV manufacturing OEM, where also we have now been able to do extremely well. So we've kind of diversified into 3 core product portfolios strategically. And within each of them, there is a journey of a product portfolio improvisation, application development, and geographical expansion. So all these, I think, are contributing well to our growth journey. And hopefully the year goes well.
Okay, understood that. Now, apart from this, Akhila, could you also detail for us as far as the margin outlook is concerned? Are you at the comfortable levels? Do you think you have levers enough to scale up the margin band also going forward from here? Is there enough visibility? Are there enough opportunities for rest of FY25 for you to bump up the margins from the current levels that you're at?
Absolutely. So we are now at a stage where the entire revenue growth will add to the leverage. We've also going into new lines of business, and this gives us an opportunity to reinvest into the future so that over the next couple of years, not just FY25, we are able to do a brisk run rate. So yes, we do see good traction on our margins, and we are very comfortable that we should be able to build on these.
Right. Could you also detail for us what is your current capacity and what are your expansion plans going forward from here? Any capex that's planned for FY25? And for that, would you need any funds, external funds as well?
Sakshi, the good news is that we are an absolutely debt free company. We are also having a fairly comfortable cash position of 500 plus crores. So, capacity expansion, capex, funding for these will be completely internal, and we are very well prepared for that. Capacity utilization, multiple product lines. We are at a high level of capacity utilization. We know where there is a need to invest further. Those are work in progress. We will definitely ensure that capacity is not going to be a block for our growth plans.
Hmm.
As to the capex plan for the year, we have a very ambitious target of almost 100 crore capex plan,
Mm-hmm.
and the journey that hopefully will continue over the next couple of years as we plan to grow the business.
And basis this kind of a capex plan, do you also have any internal targets in next 2 to 3 years? You have a visibility, you have your own target of this is the top line that we want to achieve on the basis of this capacity expansion that you'll be doing?
Absolutely, there are firm plans in place, and these are very well approved by the boards of the company. But in terms of a guidance, that is something that we will not be able to share.
Okay, but as a growth rate, would you be able to say what is a sustainable growth rate on a CAGR basis that we can expect from you?
If you take the past few years, I think that's a good indication. If you remember last year in May, we also did an inorganic expansion. We've
Yeah.
invested in a company called Excel, which has been value accretive both on revenue and EBITDA. Given
Mm-hmm.
that we have got a very fairly strong cash position, we're also looking constantly for inorganic opportunities which will kind of be bolt-ons to our existing opportunities. So all in all, I think the past is a good indication if you take, and it will kind of grow in the future.
Right. Let's compare it with the industry then. Give us a sense of how the industry is shaping up. What do you foresee in terms of the demand scenario? And in case there is a growth rate at which the industry is growing at, would you be able to up that? And would you be able to perform better than the industry rate?
That is the exact idea when we do this diversification. And if you see, the diversification is in the auto segment, right? The way we are strong. We've been
Yeah.
strong in engines. We have diversified into retailing of the spare parts and the spare parts retailing, and we've been into OEM manufacturing. Our spare part business supports both the traditional businesses, new age businesses, EV spare parts for
Hmm.
construction equipment businesses. We've also focused on developing our Greaves Finance. Right today, we are coming back we have strong business plans for that company. What we're trying to do is, therefore, in this journey of three, four verticals, we're also trying to build an ecosystem where Greaves has a very unique position where
Hmm.
we can capture the lifetime value of the end consumer. Uh, this is a journey and which will take a couple of years, but hopefully going forward we should be able to tie in all the pieces, with both the financing and technology playing a key role to it.
Right. So, Akila, help us understand since you're talking about the various verticals and you do have plans to scale up each of these verticals as of now. As part of the revenue mix, what are these verticals at currently? What do you foresee going forward over the next few years? Do you see that probably your auto segment or your EV segment, currently the contribution to the revenue, whatever the share is, will be scaled up going forward? What is the exact idea that the company has?
Sure. So the EV business today contributes approximately 20%. Uh, Going forward, hopefully they take up much more larger share because that's the sunrise sector that we believe in and the boards have invested in. We
Mm-hmm.
also believe that the retail business is something that will grow at a brisk pace, given that we are now focused not just on the legacy business, but also on newer
Yeah.
product ranges. We are adding to our product portfolio. Uh, but at the same time, if you see the existing business, the engines, the industry is doing extremely well. If you take the non-auto business, the gen sets, again, there is a good demand. The industry is doing well. I think we are
Mm-hmm.
in a particular range, entire industry, given the macro that we are in, is doing well. How the mix will change uh, is very difficult to predict, but all the businesses are likely to grow at a good pace.
Okay, got it. Also just give us a sense, when it comes to the entire demand scenario emerging in the auto and the EV space. I'm asking you not as a company, but as an industry watcher as well. Why I'm asking you this is that because just about a few months ago, the narrative was being built up that the inventories at the dealerships are at the highest, concessions from the government are coming in, there is a lot of discounting that is happening from the retailers as well and the OEM players. I want to understand, get a sense from you because you are closely related to that sector as to what the actual scenario is currently.
EV is going to be a very important component of the journey going forward, right? And this is something all of us strongly believe in. Given the overall development that is happening in the country, whether it is infrastructure, whether it is mobility, the good part and the good news is that all the sectors are growing. The overall economy in the journey to the 10 trillion economy is growing at a good pace. It's not going to be a story of either or. We now see this as a story of and diesel and petrol and hybrid and maybe something else. You know, what we have taken, therefore, what we believe and part of our strategy is to be as fuel agnostic as possible, and therefore whatever be the fuel that grows, we should, given our various verticals, be part of the overall journey. So that is what has been our philosophical belief, and that's corely embedded into our strategy.
Got it. Well, thank you so much, Akhila, for sharing all these insights on the quarterly earnings and the outlook going forward. I wish you all the best for the upcoming quarters and hope to see you back soon on Business Today.
Thank you, Sakshi. Thanks very much.
All right, viewers, we'll wrap it up at that. This special conversation with Greaves Cotton, but a lot more is lined up. Coming up next is Market Today, the closing edition on Business Today television, which will detail for you how the markets are trading in the last hour of trade today. So stay tuned.
This is a bit of a homecoming for me, as some of you may know. When I was in high school, my family moved back from the US to the city where my dad grew up in, Lucknow. As you can imagine, being a kid at a brand